There is two things I feel like women have a hard time talking about. It's money and self-care, right? And it's the first thing we're like, I don't want to talk about that, but it's the two things we need more than anything else in the world.
Yeah, well, the biggest issue with that is that we've kind of been trained in that mindset. We don't talk about politics, we don't talk about religion, we don't talk about money, we don't talk about sex at the table, right?
That's right.
These are all things that have always been taboo for women to talk about, right? But men, it's a free-for-all.
Welcome, everyone, to another fabulous episode of Get Carried Away. I'm getting carried away with Kelly Ann Winget. How did I do?
Great.
She is the founder of Alternative Wealth Partners, and we are going to be talking about money, one of my favorite topics, all about angel investing, venture capital, private equity. And if you are thinking I'm speaking Greek, it's okay. She's going to explain it all to us. Welcome, Kelly.
Thank you, Carrie, for having me. I'm so excited to talk about this because money is one of my favorite topics.
Same. And that's part of the reason why I built the Wealthy Women Summit, which you attended. I love that you came from Texas. I hope you got a lot out of it. There is two things I feel like women have a hard time talking about. It's money and self-care, right? And it's the first thing we're like, I don't want to talk about that, but it's the two things we need more than anything else in the world. So everybody, note to self, just start talking about it.
Yeah, well, the biggest issue with that is that we've kind of been trained in that mindset. We don't talk about politics, we don't talk about religion, we don't talk about money, we don't talk about sex at the table, right?
That's right.
These are all things that have always been taboo for women to talk about, right? But men, it's a free-for-all. This is what they're talking about at the country clubs. This is what they're talking about in on the golf course. This is what they're talking about at dinner amongst themselves. They'll even talk about it in front of their wives at dinner, but the wives can't comment on any of this stuff. It's all very old school, especially here in Texas. I've been in those rooms, and because of my demeanor, I can be a part of those conversations, which is why I've been able to leverage that type of experience that I've been able to have in order to give access to other people who wouldn't necessarily be invited to those conversations. But it's definitely been trained from the beginning for us to just not talk about. I was really lucky. My parents talked about this stuff all the time with the children in the room. So even though we might have been sitting at the kids' table, we were still part of the conversation. And that was really important as far as our upbringing and making me so confident about talking about it now.
Wow. Well, then that brings me to my first question. If I would have asked 10-year-old Kelly what she wanted to be when she grew up, would she say an investment partner, the founder of a fund? What would she have said?
I have always really liked money and making money. I was always making deals. So I would do the highest paying chore in the house one time and then pay my sister to do all of the other chores I didn't want to do. And so I was always making these kinds of deals from the very beginning of time. And I just really liked finding the solution to a problem and getting paid for it. Right.
And what was the most expensive chore? I'm dying to know.
Lawn work, anything to do with the lawn work. We had a lot of trees in our house, and these boxwood trees out in the backyard. So these big bushes that were squared off. And so in the 90s, you always had these perfectly square bushes that lined your fences. And we lived on the golf course. Okay. Just to give you an example, I was raised very privileged, and I accept that. So we lived on the golf course. And so the way that the greenway ran the fairway ran against our house, the tee box, if you did not hit correctly, that ball was going into our yard, and there was nothing you could do about it. So
watch out.
My first small business that I started was selling golf balls back to golfers. And because we had a big black scary dog, I would sit in the backyard with the dog holding the golf balls, and I would sell them back to the golfers for $1. I was like, your choice is either to come onto the property where this dog is or give me $1. And I'm like a small child. So they usually opted for the dollar.
I love it. See, always an entrepreneur. I have this
Yeah.
entrepreneurial spirit. Were your parents kind of encouraging that in you, like in your schooling and education? You weren't in square dancing classes, you were in the finance classes?
Well, my parents ran several small businesses before they even chose to have children. My parents met in college and they didn't have children until they're like mid to late 30s. So they were married for like 10 years before having kids. And so in that period of time, my father started a couple small businesses. They flipped houses. This is in like the late 70s and 80s, right? They're doing like what people are now thinking is really popular. My parents were doing like 40 years ago.
Wow.
So, so we were just always exposed to that. And then my father went back to, corporate America and started working for PricewaterhouseCoopers, was very high up with PwC. My mom, both accountants and CPAs. So my mom also accounting and CPA, worked for a couple oil companies, and then other small businesses, and eventually ended up she was flipping apartment complexes when I was in high school. And then after she stopped doing that, we all left the house. She was like empty nester. She went kind of back to her boring desk job as an accountant for an auto wholesaler. So they were selling like classic cars and cars to big dealerships and stuff like that. So she was head of finance there. So
I love
I've been
that.
since the beginning of time.
Wow, that is so unique. Especially, I also grew up in the same era, and we didn't talk about money at the table. We didn't, and I came from a military family, so we really didn't talk about it because your pay was based on your level rank in the military. That is fascinating. So then what got you from selling golf balls before Alternative Wealth Partners? Where did you go to college? What did you take that track? Like what inspired you to get into building wealth?
So I turned 15 and I wanted a really expensive pair of bedazzled blue jeans from
Obviously.
Buckle. People know what that is. They're all like the little diamonds or something. And so they were really popular when I was in high school, and I wanted a pair, and they're like $300. And my parents were like, no. So because even though like they were well-to-do, they made it very clear that we were in charge of our own destiny and they were not going to pay for it. So I said, fine. They're like, go get a job and pay for them yourself. And I said, fine. And so I literally like walked out the back door and down the road and got a job at a car wash as a cashier. And I started upselling everybody's tickets from the cash register. So people would go buy car wash, come inside, and I'd be like, oh, you didn't get your carpet shampooed, or oh, you didn't get a tire shine, or da. And so I was upselling inside. So I got moved outside to start selling car washes, and I'm 15. Okay.
Wow.
So
then I can't even drive the car yet.
Yeah. So I start outselling everybody outside. So then they moved me to the larger car wash in the other part of town. So in high school, I'm like working at this car wash, and I'm selling car wash. These are like high-end detail packages, like waxes and whatever else. And so I worked there from the time I was 15 until I was 21. And so in high school, part-time working, like literally Friday nights, Saturdays, and Sundays. And I was making almost $60,000 a year as a part-time high school salesperson. So I was buying several of my own jeans. And so I had that job in high school. I also worked at like I had a lot of jobs. I had 3 jobs in high school. I loved making money. I liked spending money. And when I graduated high school, I tried 3 different colleges because I was going into business and economics. And every class that I took seemed really, really easy and a waste of money.
Yeah.
So I'm like, I couldn't rationalize with myself on why am I paying this person to teach me something I'm already doing out in the real world, and I can buy the same book and read it myself, right? So I decided it wasn't for me, and I was just going to keep my head down and work really hard and keep making the money I was. So I'm one of those people that if things don't stay interesting, I get bored and leave. So kind of bouncing around, I worked and bouncing around. I mean, I was working like 3 years at a job and then moving. And when I graduated high school, I started working for a radiology company. So I was working with like 60 doctors at like 16 different locations in Dallas. So I was learning a lot about radiology and like medicine and private practice. And then from there, I moved into demolition. So then I was learning a lot about construction and demolition and cost estimating and building out databases. And that experience was what kind of pushed me into what I'm doing now. It's because I got really good at analyzing data to make a lot of money. So I was doing these really intricate like cost estimates for construction. I took that same kind of mentality and strategy and put it towards oil and gas, because I got hired by an oil and gas company to do this for them. And this was in 2013 when oil prices were starting to get to like $130 a barrel. And I was like, something's not right here. The assets shouldn't cost this much. Gas and oil shouldn't be the price this high. You have to change something. They didn't want to listen. So I said, have a nice day. Hope you figure it out. And I moved to California. And about 6 months later, oil prices like crashed to $30 a barrel and they went out of business.
Interesting.
Yeah. So I was in California and just started raising capital for other types of businesses, anything from like medical devices and cannabis to tech startups and real estate. So I did my 4 years in California. The weather's really nice, but my people are here in Texas, and I moved back to Dallas and focused back on oil and gas in 2018. Worked my way through a family office and then a large private equity company. And once I got to what's the perceived top of private wealth, I realized I was the smartest person in the room, and that was really dangerous. And so I said, if they're doing it like this, I'm going to do it on my own and do it the right way. So I launched Alternative Wealth Partners in the middle of the pandemic,
Nice.
because there was a huge gap between the information investors were getting and the information that investors should be getting, especially when there's a lot of panic in the market and people are looking for something alternative. So that's where Alternative Wealth Partners came from. I wanted to give access and education to investors to start investing in alternatives outside of the stock market.
Right. Oh, I freaking love this. This is incredible. So what does alternative investing look like? Like if you were telling 11-year-old, this is what alternative investing looks like.
Yes.
How would you describe that?
So alternative investing is everything outside of stocks, bonds, and currency like cash. So your real estate investing is an alternative. Your precious metals investing is an alternative. Crypto's alternatives. Private equities an alternative. So investing in a privately owned company. Starting your own company is an alternative investment. Like people are getting really into like laundromats. That's an alternative investment. So all of these things that you're doing outside of buying your Exxon stock, your Tesla stock, is alternative. And there are like alternative like ETFs and stuff, but that's just things that aren't usually invested in the stock market. But a true alternative is everything off of the market.
Everything off the market. Love it. Love it. And when you built it, I know you also found a gap in investors, right? You weren't working with a lot of women. How in your kind of mission of AWP that you were like, I'm going to make more women be in a place that have access to funding like this? What was kind of the drive behind that when you were building this fund?
So for 10 years, and I want the audience to understand, the fact that you don't know this information is on purpose. So don't feel bad or feel stupid or, like you're missing something. It's literally on purpose. The brokers, the financial institutions, they are specifically not marketing to you. And if you've ever seen the movie Boiler Room, there's literally a phrase that says, don't pitch the bitch.
Yeah.
And it's the sales training for people on the phone. The wife answers the phone. If the husband's not available, they hang up, right? So these private opportunities are only marketed to 55, 65 and up white men, because they think that those are the only people who can write checks. And I realized from my own experience that I would have these long conversations with that type of investor, and it would come to the time to write the check, and they didn't know what bank account, where the checkbook was, how much money they actually had to invest, and they had to go ask their wife. Okay. And whether it was a cop out or not, the wife would get on the phone and they would be mad because they don't know what has been talked about for the last, 3 weeks that this person's been negotiating back and forth. And the reality is that we are making the financial decisions for our household, but we are not making the financial decisions as far as our estates go. And that's going to be really dangerous because we are going to inherit it all. And if we don't know where it is or how it's been managed for the last 30 years of your marriage, how are you going to protect yourself after your spouse is gone? We outlive our spouses. If you're married to a man, you will outlive him.
Yeah.
And speaking from personal experience, like my father died at 59 from a heart attack, and most men literally turn 59 or 60 years old and have heart attacks and die. And we have to be prepared for that to be a possibility. And if you're never talking to your partner about what they're doing with their investments, when you inherit that wealth, your financial advisor is just going to say, John took care of it. I know what John wanted to do with this. And we have to be confident enough to say, well, like, John's gone and it's my life now. And my financial needs are this. And I need to invest this way and understand how to direct your money. And it's an important thing to have to take ownership of. And so that's what I've decided I'm going to do. I just spend a lot of time talking to women about, please think about money in any way. Like, even if you don't want to be responsible for investing, just have the conversation and know what's going on. You don't have to have complete control, but just have some sort of insight into where that is.
Mm-hmm. Have you always been self-driven, or was there anyone that you looked to that you kind of were like, oh, she's really inspiring, she's in the money space, or has this always been like this internal drive in you?
A lot of it comes from myself, but also like my mom is really inspiring. She's always had a lot of control of her own financial well-being, and she's very smart with her money. And she's also very creative with her money. Like she has a managed portfolio, but she also manages another part of her portfolio, and they compete with each other. Like her financial advisor and her like compete with their portfolios and who's doing better. And which is kind of fun to watch. But as far as like a public figure, like Sally Krawcheck is really just an incredible person. And if you're in the private wealth space, like she is private wealth. Like she is literally the wolf on Wall Street. Not even a wolf on Wall. She is the bull. The girl that is standing in front of that bull is Sally Krawcheck.
That's her.
And and she's just incredible. And I've had many opportunities to meet her in person and have conversations with her and work with her. We're a Series B investor in Ellevest. Ellevest is a female-founded, female-created financial platform that's literally created specifically for women who want to start investing. And it starts from basic financial literacy all the way to private wealth, which is what Sally's background is. And so their private wealth portion. So if you have $1 million or you're a high income earner, like, and you want somebody who is on your side and understands you as a woman, as a female investor, like Ellevest is a place to go. And I had a membership of Ellevest before I was even an investor in Ellevest. So it's kind of like, take that for what that is.
That says a lot.
Yeah. And so it's a great unbiased place to go if you're wanting to learn more about where your money is.
Yeah. And it sounds like your mom was your first teacher,
Yes.
which is really, really, really important, because then you're creating a legacy of wealth from her on down to you, and then your family, and so on and so forth. I love that. Now, let's clear up for everyone to understand the difference between angel investing, venture capital, and private equity. Yeah. How could you also break that down in bite-sized pieces for my audience to digest?
Sure. So private equity is the umbrella of these asset classes. Okay. So venture capital and angel investing falls under private equity, right? But the private equity strategy is very different from like a VC fund or you as an angel investor in something. So angel investing, you're literally probably the first check in the door. Somebody has a really good idea. You're most likely a friend or family or know somebody who knows somebody, and you're, supporting a brand new business, or maybe it's the first check that a business, like an ongoing business, is decided to take from another investor. So no longer are they self-funding. They're now going out and saying like, hey, I need a piece of equipment. I can't buy it. My bank doesn't want to lend it to me. Like maybe my uncle will give me $30,000 to go buy a piece of equipment. That would make him, like his uncle would be an angel investor. VC is going to be more focused in, right now, it's a lot of healthcare, fintech, health tech startups, right? Your VC strategy is kind of a shotgun approach. You're going to invest in a lot of companies, maybe smaller check amounts, and you're going to hope for these big wins because you're the next check in from that angel investor. There might be a series of capital raised from maybe a little bit bigger than angel investors, but VC is kind of that next layer of funding. Then you have private equity. Private equity typically invest in controlling interest of privately owned companies. So they're going to go in, they're going to buy 51% or more of a business and turn it around, do some things, and then turn around, flip it, or take it public or something. There are also private equity companies like Alternative Wealth Partners that does more growth private equity. So we're coming in and we're providing growth capital. So maybe a company has been around for a few years. They've kind of exhausted their relationship with their bank. So, they're beyond a line of credit. They're beyond, equipment financing. They need more money, but there's not the traditional funding routes available to them anymore. But they're not quite at the angel level. Like someone writing a $50,000 check is not going to get them to the next level. They need like 2, 3, 4, maybe even 10 or $20 million. They're going to go to private equity, and we can provide kind of creative capital solutions that can take them to that next level. And then we flip it to much larger private equity companies. And that's how we operate. We don't take controlling interest, but I have the relationships with our portfolio companies, the companies that we invest in, that we can come in and provide not only money, but also the advice. So we have advisors in place that help with like accounting issues or marketing.
That's cool.
Or, any type of supply chain issue they have. And that's just from our network. Kind of like how Broad Network connects all these people. We do the same thing in our private equity companies. And that's the difference between a venture capital and private equity, is kind of that extra layer of commitment to the success of the business. A lot of venture capitals might have the advisory as far as like maybe a COO or a CEO or how to fundraise more, but not actually in the operational side of like, where do you fix the supply chain issues? The VC investor isn't going to be doing that, but the PE investor will.
Yeah. Ooh, this is sexy. I love this topic so much. I could talk about this forever.
Yeah.
People
are investing in this space and they don't even know it. So it's kind of having you understand like this is an actual asset class that you can invest in is cool.
Yeah, I love it. Now, when you were first starting out, what would you say your biggest risk was? What was something? Have you ever invested in something you were real nervous about? Or did you always feel like this is going to go good, or were you like, yeah, let's all get on this train?
So the one thing that makes me really nervous is venture capital.
Yeah.
Because in tech, I really am, because I've worked on a lot of deals. I've worked on like over 200 private placements, and I've raised almost $1 billion in private capital. And I'm talking like $100,000 at a time. It's a lot of work. And the only ones that I've ever seen fail like really bad have been tech companies. And it's not necessarily like the tech didn't work or anything. It was just, it's really hard to find passionate management teams in technology especially since only until recently, there haven't been a lot of female fund managers or just management teams in fintech or any type of tech startup. It's been mostly men, and they have a good idea, and then people throw a ton of money at it, right?
Yeah.
Because there's what is the picture of a tech company,
Right. The
and then-
Silicon Valley guy, there he
Right,
is.
right. So you have your tech bros, and
Mm-hmm.
they have like this dream idea, and they kind of create sort of a version of it. And like, that's good enough for investors to dump a bunch of money into it, but there's no like follow through, and they're not connected to it the same way that a lot of these business owners with like a tangible business are. And so for me, it's really hard to write a check for a tech company because there's nothing holding them accountable to like follow through. One of the companies I worked with, $18 million was raised in a very short period of time. And they created the app and they were starting to generate revenue. And then Uber wrote an article about launching Uber Freight, which was like a direct competitor for this startup. And they literally just like threw their hands up and they're like, oh, well, we can't do it because Uber's doing it. And I was like, but Uber's not doing it.
Right.
Have you ever heard of Uber Freight until
No,
right
I have not.
Yeah,
No,
exactly.
I have not.
They
Yeah.
wrote one article and it was literally to scare
Wow.
everybody away.
Wow.
Yeah. And it's
Man.
like, yeah, it's just one of those kind of really disappointing things because those investors, they understood the risk.
Sure.
It's just one of those things where like, yeah, they lost because the company literally gave up.
Ugh.
And if you have a tangible business, those types of business owners are like, they would put their blood, sweat, tears, family, everything into that, and literally run it into the ground before they would give up. And that's the same kind of, which is really cool to see all the female founders coming out of these companies, because even though they have a tech company, they're so like driven to make it succeed that they would do anything for it. And they've had to strap it from the beginning, and they're only getting these tiny little checks written to them all the time. So they have to make it work.
Yeah.
Men from the beginning of the tech kind of boom is that it's really easy for them to walk into a room with a slideshow and get written a $350 million check after failing with 2 other businesses.
Right. Right.
So women, and Sally Krawcheck's a perfect example of that. Like, she literally turned around and made Merrill Lynch what Merrill Lynch is. They fired her, okay, put some guy in that didn't know what he was doing. And then now she's doing it again on her own. Everyone's like, oh, she doesn't know what she's doing. She literally did it 3 times.
Yeah.
eBank and Merrill Lynch. Like, these are things like you can prove that you can do it and you're still not going to get written the check, or, and this is me going on a tangent. We're getting carried away.
Oh, I love it.
Getting carried away early. And so there's a lot of struggles there. And so, I've been fortunate enough to be able to raise a lot of money. I've raised $17 million in the last 12 months for my own fund. And, but it really has a lot to do with the confidence, and it's really nice to see kind of that change happening.
Sure.
So it's a part of it.
Yeah. And I think, women becoming investors, although they've been around forever, it's like investing in other women or BIPOC companies, LGBTQ plus companies. I see we're at an age of a new renaissance, and like, we are really at the beginning of something. And Kelly, what you're doing is you are literally laying the groundwork for this. You and a lot of women I've met that have been on this show that were at WeWo and everything. And it's really, really inspiring. It almost gets me like, ooh, we're so close. But yet we are still very far.
Yeah.
That being said, tech being not something you would really, want to have anything to do with, what are companies that you do see potential in, or what do they have in common that you're like, I like what you guys are doing? I say you guys as in a slang term. Yeah.
I say you guys all the time. My mom was born in Pennsylvania and grew up in Long Island. So I say you guys all the time. But I don't want people to be discouraged about investing in venture capital or startups, or like being able to support the kind of the change in the face of tech. Because You just need to understand the risks. And this was my biggest thing of why I started Alternative Wealth Partners, is because people, it's all a sales thing. Everyone out here raising capital, they're salespeople. Okay. They want you to understand, like, this is the best opportunity ever. Give us your money. Right. And the reality is that it can be really, really good. Those companies can 100x, 1000x. Like, that's the reason why there's so much money getting dumped into VC. But the risk is you're going to be waiting a really long time for those things to become successful. And you do have a high degree of risk of loss, and people need to understand that. Like, you could really think a company is a really amazing idea, but you're like maybe one of 100 people who think that, you know, and you need to be able to scale that in order to make a return. So, just keeping that in mind. I really like manufacturing. I really like infrastructure. I really like energy. I really like the tangible stuff, like real tangible solutions to things. I'm a really big fan of the game Monopoly, and how you win Monopoly is owning all the railroads and all the utility companies.
100%.
So, I'm definitely a big fan of that. So, like, our fund is a diversified fund, and we invest in everything from like oil and gas to cannabis. And so, our kind of strategy there is that we're moving into this more domesticated ownership. So I think manufacturing is moving back to the United States, technology is moving back to the United States. We're kind of having this blend of what happened after World War II, and then also all the stuff that's happening in inflation. Everything is like literally what happened in the 70s. So I think we're going to have more ownership of like the USA made products. So, and the Rebuild America initiative and all these.
Yeah, I was going to say that, the government is putting money towards it too. Yeah.
Right. So, I think the more that we can support privately owned and small business that are doing these things, the better off we're going to be, because ultimately it's the small businesses that boost the American economy. And banks have stopped funding them because they think that the only asset they can fund is real estate, because they've stopped taking risks. And that's because the returns aren't there. So us as private investors and people in the audience that have the money to invest, like, need to understand that you are going to make the change and you have to write the check. Stop leaving your money in the bank. Okay. Because women historically sit on most of their net worth in cash.
Yep.
Which right now at like 15-20% inflation, you're hurting only yourself. So,
or they think they have to pay down all the debt. I can't be in debt. I can't be in debt. Yeah.
This is like the cheapest time to have debt. Like,
it really is.
Maybe not houses right now, but there's an opportunity for you to be really powerful with your money, your cash, and it's not going to be in a savings account. So support the businesses in your community, support the businesses you think are going to, be the next wave of change. And that's what we want to be a part of.
Yeah, for sure. Especially, and that's hence the name Alternative Wealth. You're coming up with alternative solutions to problems or future problems, right? Especially with energy. I think that's a huge one. And whoever can figure out the water problem, especially here in California, here's my checkbook. How much do you want me to invest? Like, I'm ready.
There are companies out there that are doing things like that. And now we have a large investment in the oil and gas space. And I know that California feels whatever they're going to feel about oil and gas. But the reality is that we cannot build a solution when oil is this high in price. Okay. And the only way to bring down the price of oil is to produce more of it. And so, so that it meets our demand, because right now we've had just a decade worth of government and investors saying, stop drilling. So the oil companies are like, okay. And so now the money's going back to investors. And now the government's like, you need to be drilling. They're like, but you just told us not to drill. And so there's a lot of like, what are we actually supposed to be doing? And if we are doing what we're supposed to be doing, then now you're going to tax us on that. Then we don't want to do it, And so it's really complicated. And there's this whole other side of the industry that people don't understand. And changing our energy infrastructure here in the United States is going to be a Goliath of a project. And And we're nowhere near ready for it. And
No, we don't have the infrastructure. We don't have,
there's-
I mean,
yeah, it was crazy. I was in LA yesterday, right? And I'm driving around from the
shocked by the gas prices.
I'm never shocked by California's gas prices. But the power lines in LA, okay, we're driving around and I'm pointing out to these power lines, and there's these just massive power lines, and they've got like 6 or 7 strings between them. They're all going to the buildings and everything. And I'm telling my publicist, I was like, in Texas, all of our power lines are buried. Like they're not up in the sky. They're not attached to the buildings. And they're much larger and go much further with less. And I was like, you're having transformers that are literal like energy stations, like connected to neighborhoods, schools, and like Sony Studios has a giant transformer in the back of their studio lot. And I'm like, this state is so pushy about switching to renewables, but there's like, look at what you've got. This cannot support that. So upgrade, come into the 21st century, a power movement, and then maybe you can get your power from other sources besides oil or natural gas.
Yeah. And let's not even go down the rabbit hole of what's it mean to work next to a generator, a power for 20 years. I mean, what's that going to do to my girls? Like, what's that going to happen? We haven't made that connection yet, but I'm just saying.
So just like food for thought. And this is stuff that, like, thankfully, which for me is a lot of fun to have to think about all the time. How can we support these things? And I don't work with, the conglomerates of oil and gas. I work with small owner operators, because about 1/3 of our production in the United States comes from privately owned small operators.
Oh, I didn't know that.
Yeah, it's a huge chunk of our production comes from privately owned. And we're one of the only places in the world that you, as an individual person that exists here, can own oil and sell it to an ExxonMobil. So, mineral rights owners are literally just people that have wells drilled on the backside of their property. They'll never see it. And Exxon has gone in and they've drilled a well, and they go 2 miles down and 2.5 miles over and suck oil from the middle of the earth. And then every month you get a check from Exxon for the oil they've taken out of your property. You get a rent check from Exxon.
That's called passive income, everyone.
That's called passive income, yes. And we're the only place in the world that allows a private individual to own natural resources and sell it to a company like that. So you can be a dividend owner, like a stock owner that receives a dividend, or you could own the resource in the ground
that they want.
The first check out of the door.
Yeah, I'm going to start digging and see if I've got diamonds underneath my house.
Well, where do you live?
I'm in LA. Yeah.
Well, you should check your title and see if you have your mineral rights. You probably don't, but
no, probably. But now, if we scale back a little bit, so everyone doesn't start digging for oil, what would you say is a comfortable amount that a woman, an individual, would feel comfortable like going to a fund like yours and saying, I want to be an investor, but I don't have $10 million. What, maybe get 10 friends to make $10 million? I don't know. What's like a great baseline for someone to be new to this to start with?
Most private placements have a minimum typically between $25,000 and $50,000. So those are the minimum check sizes they're taking. My minimum is $100,000. And that's just because our portfolios are very diversified. So you're not putting $100,000 in one company, you're getting your pro rata share of, I think we're up to 25 portfolio companies. So you just have your pro rata share of those businesses, and then you get a blended rate of return. So it really just depends on like what the strategy is and what their minimum is. There are ways for you to like come together with a group of your friends and put together that money. You do have to be accredited, which means that you're either $1 million net worth outside of your personal residence. So all of your investable assets come up to about $1 million. You have an annual income of $200,000. And this is so you just one of these things qualify you. $200,000 a year in annual income, or $300,000 if you're doing as a spouse, like two of you. And then there's some deeper meanings, like if you're going to go through a trust or an investment company or entity, you have to have $5 million worth of assets in order to be a qualified investor, which some things, if they have a little bit more risk, require you to be qualified instead of accredited. That means a $2 million net worth.
Mhm.
Or if you want to go around all of this and you just have a lot of disposable income, but maybe you don't have $1 million net worth yet, you can just take your Series 65. The SEC in 2020 decided that they were going to make this space more accessible by allowing people to take their Series 65 without a brokerage sponsorship. So you no longer have to be sponsored to take the Series 65 exam.
Oh, that's interesting.
Yeah, so you can just take the FINRA Series 65 exam. It's not very hard, but you do need to study, and it just tells you like basic investment terms. You learn the vocabulary. It talks a lot about insurance products, which might help you if you're like ever approached with an insurance sale person. And but it just gives you kind of enough knowledge to make smarter, more educated decisions. And so then they've decided that your Series 65 makes you an accredited investor. So it's a little workaround if you're not quite there with your asset.
Right. I gotcha. Yeah. At Brawl, we're trying to build a syndicate of investors and get women to come together to contribute this a little bit. Like you put a whole bunch of jars together and they're all going to have their own jar. And then we're going to take it to someone like you and say, here's our jar.
Yeah.
You figure it out. That's what I think is the best thing is about what you're doing and what funds provide is you guys are doing all the work. Just you do all the work. You watch them. Just here's my cash and just give me my check when it's done.
Yeah. So there's a couple ways you can do this. So we're not financial advisors. We're not a registered investment advisor. We're not any type of anything. We are literally super biased about our own funds. We're doing this. Like, this is our strategy. Just understand
This
that.
is who we love.
Yeah. Do not come to us about your portfolio advice. We don't care what you do with your money. We just care about the money that you give us.
Mhm.
And we're, our fiduciary responsibility is to our fund, and that's it. So, you can do it through an SPV, which is a special purpose vehicle, which is how a lot of these venture capitals are raising capital. It's kind of like a workaround to a fund, and it's kind of a new thing, SPVs. And it's where a bunch of individuals can do small amounts of money and go into this special little purpose vehicle. And then that special purpose vehicle goes into a different fund. It's a smaller version of what a fund to fund is. And then people who want to raise like less than, $1 million. The other way that you could go, and this might be more creative for you guys and also more fun since you already are a networking group, is to actually have the BRA investment club. An investment club doesn't, an investment club, it requires a little bit more legwork as far as like the structure goes, but you do not have to be an accredited investor to be in an investment club. But the managing person does need to be an accredited investor. You cannot invest all of your capital into one place. You have to go at least 3 different places. And you can't be more than 40% invested in one thing.
Gotcha.
So there's a couple different and I'm not a lawyer, so don't take this as legal advice, but there's a couple different requirements that an investment club has to have. But I think that that's probably going to be a better solution for you because at least from my experience of meeting the people at the Wealthy Woman Summit, is that they're capable of writing a $15,000 or $25,000 check.
Yeah.
Which is going to be more at the level of an investment club than in a SPV. Because your SPV is going to be more of your $5,000 people all coming together, $10,000.
Sure.
So an investment club is going to be more collaborative, voting on what you guys want to vote.
Invest in and
And then somebody is in charge of managing that. They get paid. Sometimes they get paid a fee. Sometimes they don't. And then you guys just are invested through that entity, and that controls whatever they're invested in. And you can get, pitched all together. There's several of these investment clubs around. And after this, I'll send you some links to them so you can see how they look.
Sure.
I think that's going to be more up BRA's alley than trying to do an SPV for all these different things you guys are doing.
Yeah. Well, that's great advice. I appreciate that. I'm a part of an investment club but it's just commercial real estate.
Okay. Yeah.
And we're called the Real Estate Goddesses.
Oh,
And
cool.
and the founder is a bra member, and she just brings properties together. And, there's like a factory, and it's not in California. We're not investing anything in California. It's like a factory in Mississippi. We've got this commercial property in Arizona and everything. So it does take kind of I think what happens is women get in their head that like, oh, I don't know it. So then I can't possibly be a part of something like this. And then they basically make decisions based on fear, right? So because I don't know it, I'm going to screw it up. I'm going to lose this and, go to destitute and be on the street, when that's really not like that.
Yeah. Do you guys invest all together in an entity, or do you guys just review deals together and some people invest and some don't?
We review and then decide who, and then at what level we want to be in, and if we have to bring in other investment clubs or people. So I get all the emails and I'm just like, okay, yes. Like, what do you guys want to do? So it just depends. I definitely agree with you by not keeping your money sitting in a savings account, because it is not doing you any good. And they're just loaning that money out to companies you probably don't want your money to be going to investing in. So invest in something you're passionate about.
Yes.
That is for sure. Kelly, there's been so much knowledge in here. Before we get carried away, what's some last minute parting words, advice, or, you would give to someone who's just starting out and in investing, like something they should avoid, something you would recommend other than call you? What would you say to someone who's just starting out?
My biggest piece of advice is that, and I do this all the time, I throw financial advisors under the bus all the time, but, if you want a financial advisor, find an independent advisor, like find an RIA, which is a registered independent, like investment advisor. These people are typically not attached to a large brokerage. They have their own investment strategy. They can do different stuff. They can invest in private deals. They can invest in the stock market. Like they're have a little bit more freedom than if you were going to go to your Edward Jones or Fidelity's, Charles Schwab's, anything like that, because those people can only sell that product, Fidelity products, Charles Schwab products, So there's better people you can have on your financial decision-making team, and that's going to be a CPA or a tax strategist, a tax planner, and an estate attorney. Like find those two people and then go find somebody to deal with your money, because those two people are going to structure you financially, like in a really efficient way, where now your investments are going to be more powerful. So having a tax strategist that can work with you on where's your money now and how can we plan for your future money. So when you're making those investments, they're going into the right buckets to then grow at the most tax efficient way possible. And then your estate attorney is going to make sure that those buckets are protected and structured so that when you pass away, it's going to the right place at the right time, and you're paying the right taxes.
And the right taxes.
That those two people are more beneficial for you than a financial advisor. Just my two cents. You can do a lot more with those two people on your team than you can a financial advisor.
Okay. I think that's great advice.
Yeah. I think that's my biggest 2 cents is find a really good CPA and a really good estate attorney. And I've got both of them. So if you want those things, I can always make a referral.
Awesome. How can we get a hold of you, Kelly?
I'm super accessible on LinkedIn. So I don't manage a lot of my social media, but LinkedIn I do. I'm obsessed with my LinkedIn. So if you want to talk to me directly, like LinkedIn's the best place to go. I post a lot of information on there. I talk about relevant, like current events, any type of event that I'm going to or I'm speaking at or whatever is on LinkedIn. So find me on LinkedIn. I'm pretty sure I'm the only Kelly Ann Winget. The only other Kelly Ann Winget I know is a Bollywood star. So, just when you're choosing which one to click on, there's me and a Bollywood star. So if for those of you who can't see, if you were just listening to this, like I am a 32-year-old white woman. I'm not a Bollywood star.
Dreams unrealized. There's still time, Kelly. There's still time. I love that. Now, before we wrap up, let's get carried away because I could talk about this stuff forever. I could have a whole podcast on this topic. I love it. And I can't wait to have you back at the Wealthy Women Summit in 2023.
So pumped.
Yeah, it's going to be fun. First, what's something that you absolutely love? Maybe you became obsessed with puppies during the pandemic, or baking, or making your own yeast for sourdough. What's
Mhm.
something you get carried away about?
There is a gas station called Buc-ee's. Their mascot's like a beaver, and there's these massive gas stations. They have like 100 pumps. They're only for cars, not for trucks. Okay. The inside of the gas station is like a mall. Okay. It's insane. Like, look up Buc-ee's. It's Bucee.
Okay.
And it's a Texas-based company. I'm obsessed for a business reason. So like, it's a privately owned company. It's worth an unknown amount of money. I'm pretty sure close to $2 billion. And it's family run. They pay everybody really, really well. I think their starting wage is like $17 an hour. They have
Wow.
like multiple weeks of paid vacation from day one. Like, they just treat their employees really well. It's just like the ultimate, like, they did it. This is the American dream. This is the business. And so that's why I like it. Also, the beaver's really funny. And I collect all of their shirts. They have all these funny shirts that has like a big giant beaver on it. And it like has like Christmas beavers and like Thanksgiving beaver. And so like, I have a Halloween one that has like a beaver that has like a skeleton of a beaver. And then on the back it says, can't talk right now, I'm doing spooky stuff. So like, they're just like funny little joke shirts. And so they're a growing business. So they're like in Texas or in Tennessee, like in the South, Tennessee, Alabama, Mississippi, Florida, Georgia. So they're growing.
Buc-ee's. Okay.
Yeah, Buc-ee's. It's really ridiculous.
I love it.
When I come out to California for the Wealthy Women Summit, I'll bring beaver nuggets, and everyone can have Buc-ee's beaver nuggets.
I want a wealthy beaver.
Yes.
Just holding up some cash.
Yes.
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 The investment beaver.
Yeah.
I love that. I love that. Buc-ee's. I've never heard of it. Okay.
Yes.
Now the opposite, of course, is what something other people get totally obsessed and carried away about that you can't stand. For example, I can't wrap my head around why anyone would want to go camping out in the wilderness with bears and stuff, but people love camping. What about you?
I would feel that too, but mine's like, the idea of not having a restroom really bothers me. And I don't know why people would choose that. But I think that the Kardashians are one of them. I don't understand that.
She just started a fund.
Yes.
Her
mom private equity company with the ex-Carlyle group. And like, I'm like, you do know that their stock's down like 50 something percent for the year, right? And that's the guy you got to run your fund.
Yeah. No, she don't know that.
Yeah. Well, the thing is like, you have two directions when you become that kind of net worth, and you can go into a family office or you can go into private equity, and they should have just stayed a family office. There's no reason for them to deal with retail investors at all. And it's just a way for them to like absorb these little companies they don't want to fight against, like compete against.
Yeah.
So it'll be interesting to watch what they do. It's just funny that she did it right after she got fined by the SEC for marketing.
Yeah. Isn't that funny how that all happened? Yeah. That's also a whole nother podcast we could talk about.
So I think that's what I could get carried away about, the people that take advantage of the system and then do it I don't know, just a lot of that. There's a lot of that going.
Yeah. And if anyone listening hasn't heard about what Kim did to get fined by the FCC, just Google it. It's quite fascinating. It's basically insider trading, but hey.
I'm just waiting for the Twitter, like the stuff with Twitter and what Elon Musk is doing.
Yeah. Oh yeah. That should be an interesting soap opera as well.
I think that if your listeners want like an action item, it's a call to action. It would be just start reading the financial news. Like, I know it seems really boring, but like once you start like looking at it all, you're like, what is going on? It's like, well, this is what's been happening in front of you for decades.
Yeah.
So yeah, just suck it up and read it, because it's going to affect you deeply.
Do you have an outlet you recommend?
You have to read them all. Like you have to
Okay.
really try to stay as unbiased as possible, because
Yeah.
if you sit and read the Wall Street Journal all the time, you're going to get the same bunch of news.
Yeah.
And so unfortunately, you do have to read the crazy from both sides.
Yeah, for sure. I would agree with that. For sure. And it's also different perspectives, different spins, just like with any, situation that we're all, or news.
It's like Goldman saying oil's going up and oil's going down every
Right.
other day. And it's just because they're trading against themselves. So,
Right. So, all right. Well, I don't think anybody's ever said that. Things to get carried away about. So that would be a first. They have mentioned the Kardashians before. That you're not the first to mention that one. Well, thank you so much, Kelly. You've given us a lot to gnaw on right now, and chew on, and really, really focus where we're spending our money and how we can make more, which is our whole goal here. Thank you for being a guest, getting carried away. I appreciate you, and thank you.
Thank you so much. This was a really, really fun podcast.
Bye.